Well, good afternoon and welcome. Welcome to another of our Webinar Wednesdays. In another one of the series of Managing Your Pandemic, webinar number 13. This webinar series started on March 18th when we talked a little bit about the EIDL program. The Webinar Wednesdays has been going on since January of 2013, and hopefully we'll be back next week with number 14. So good afternoon. My name is Kelly Bearden. I'm the director of the CSU Bakersfield Small Business Development Center, or SBDC, located in downtown Bakersfield. And we're part of the nationwide SBDC program that is in all 50 states. And actually here in California, we're part of the Central California region. And we cover the counties of Kern, Inyo, and Mono. We do have throughout our Central California region that goes from the Pacific Ocean to the state of Nevada. To the far south of Kern and the north of Mono, we do have 6 service centers in that region. Ours is, of course, in downtown Bakersfield, but there's ones in Clovis, Merced, Modesto, Salinas, and at San Luis Obispo. So frequent the centers. If you need any assistance for any consulting, you can get expert advice on what we're talking about today. And also, you can also find out other issues for restarting your business. Many of the centers are doing other events that are really pertinent to the times that we're going through today. But on Webinar Wednesday, we're focusing on EIDL and PPP and the resources that are available to small businesses, funding resources that are local, state, and federal. And a lot of the emphasis has been on the PPP and the EIDL programs, which of course we will get into some more today. And thanks to our various sponsors out there, and since I don't think I've mentioned them in a long time, so let's just run through that real quick. The County of Kern, thank you for your support, Mid-State Development, the Governor's Office of Business and Economic Development, the CSUB Business School of Business and Public Administration. Of course, we're powered by SBA, being SBA funds the program nationwide to a large extent. And also we're part of the Blue Tech Valley program, an innovation and technology program for water, energy, and technologies. So thank you all for your assistance. And today we're going to get into, with having some nice new legislation, we're going to get into managing the new PPP. The Kern Recovers is going to be, we're going to do a little bit of update and some EIDL and PPP and breaking news along those lines that we're going to get into that just broke maybe a little more than a half hour ago. And of course, your questions and a poll. So let's do that poll right now. Let's see what we can do here. Okay, so you know how the polls have gone. Sometimes we whip in a nice little whimsical poll. Sorry, I know you want one, but it's going to be another week or so before we do that. So today we're going to focus more on EIDL and PPP and ask the questions that help us kind of gear the conversation today. And the conversation for the first poll is, which of the EIDL Advance, and PPP has your firm received? So we're looking at EIDL Advance, PPP, the EIDL Advance and the PPP. If you only got the PPP, if you only got the EIDL, or you got the EIDL and the PPP without the Advance is the last one. So 3 different programs, 5 different options for you to select. So, you know, we're getting a large number of PPP only today. And just a few that are EIDL only. Give you another couple of minutes to vote. Hey, we're up to 65%. 54% of you already selected PPP only. So we see the winner here in this horse race. So I'll give you another second and we're going to close the poll with over 70% of you responding. Thank you for your votes. And it is closed. And sharing the results of the poll is 55% of you have only received the PPP. Well, if that's the case, then our breaking news might be very nice for you today. And we're going to get to that in just a moment. For 20% of you today that responded to the poll, you have the EIDL Advance and the PPP. So you could still be awaiting an EIDL loan, or maybe the EIDL Advance is all you're going to get. We'll hopefully try to figure that out at another time. Some of you have received, 11% have received the EIDL Advance and the PPP loan, and also 11% have received the full EIDL with the PPP. yet only 3% of you out there have only received idle only. Okay, valuable to know. Lots of PPP out there, and we're going to be discussing in that a lot, obviously, with the changes in new legislation. So let's stop sharing that poll, and let's go to our second question that we have for you today. And that is, if you did receive an idle amount, and this could be either idle advance or idle loan. So the first one is going to be 10,000 and under. Launching the poll, you'll see that we have 10,000 and under, 11 to 75,000, 76,000 to 150, 151 to 350, and over 350. So jump in, vote once, vote often, vote in a hurry. We're up to about 30% of those in attendance. So we'll give you another few minutes on the old idle. I know a lot of you don't have an idle, but we are up to close to 40% of you. And we're going to end the poll in just a minute or two. And, or I should say moment or two, and it's ended. So sharing those results about the idle amount is that a whopping 54% of you have received the advance, 54%. That's 10,000 and less at this time. We see another 24% of you have received between $11,000 and $75,000 in your idle. So that's a idle that's up to 75,000 in those range. That's a good amount. And a number of you also, 20%, have received an idle between 76 and 150,000. And just a few of the bigger idles on today, and none over 350. As you recall, some of the very early recipients were receiving 500,000. Then it kind of drifted down to that 350 level. And from what we've seen recently is it's kind of capped at 150. Okay, well, thank you for participating in those polls. Those polls are really helpful to try to give us a little bit of guidance on the direction where we need to go today with who's out there. So this is the time when I generally will bring in our guest speaker. And our guest speaker really, to many of you out there, really needs no introduction at all. He's appeared on several of our 13 webinars, offering guidance and expertise as the #1 lender of SBA loans in Kern County by volume, and has been in the SBA field for so long, has connections and resources and partners that get him this information and make him a very valuable commodity to all of those out there that are in small business. He is, of course, and actually I'm doing this introduction without reading anything from his bio. I just hacked it, but as I always add, Keith is a past recipient of the John Brock Award, a distinguished, very distinguished Kern County recognition for community service. Keith, thank you for joining us and welcome again.
Thank you, Kelly. I'm excited the fact that I have a haircut now that closely matches that picture. So that's a plus for me. But yeah, it's always fun doing these things, and I think we have some exciting news to talk about, and obviously talk about the changes. So I'm ready to start whenever you are.
And I'm sure your hairstylist or barber is thrilled as you about being back to work. So that is great news for everybody. Okay, Keith, let's start off with a little discussion that we had in last week when we had Jim Zervis on with us talking about the Kern Recovers. The Kern Recovers is a program that's still open, and it's still kind of operating as it had been. I'll give kind of the real brief parameters, and then let's talk about some of the nuts and bolts that are happening in the program. It is a program up to $75,000 for select non-essential businesses that have been closed mostly. And if you received a PPP, you're still waiting. And that business must have been in business, the applicant, prior to March 1. Locally, independently owned businesses affected by COVID-19 and utilizing the loan proceeds to mitigate these impacts. To qualify for this program, you must have 50 or fewer employees, 5 million and less in annual revenues. We're guiding people to the county's website where you can get contact information to contact the 4 lenders that are working with this program, and that would be Alta One Credit Union, Mission Bank, Valley Republic Bank, and Valley Strong Credit Union. The link right there is below for the Kern Recovers website if you are interested in that information. And Keith, what are we hearing on this program?
Well, I think it was in the Californian this morning that the county has actually already approved 54 businesses for about 1.27 million in loans. I think the average is 23,000. Now, keep in mind that 1.27 million is of a $25 million pool. I will tell you, I reached out to one of the lenders this morning just to sort of get some real time. They've gotten over 90 applications. So this is 90 applications in it's about a two-week period of time. So I fully expect this to be a very successful program. The interesting thing's going to be with the changes to the PPP. You know, will it slow down a little bit of the momentum for this Kern Recovers? I don't think so, because the PPP is going to sunset here pretty soon. So I think they're going to continue to have that momentum. But good program. I'm very happy that our county has engaged in this particular program. And if you are a qualified small business and or if you know someone that was, shut out of the PPP, this may be an ideal program for you. Again, they're going to prioritize their applications based on non-PPP recipients. And after that, who knows how they're going to open up the window. But it's a great program. Take advantage of it.
It really is. And by being able to use the multiplier, the 4-time multiplier, really can open up, if you have a choice now to go PPP or go Kern's Recover, that 4 times instead of 2.5 is a larger loan amount, and it's more flexible since you can use it for 1/3 for working capital, 1/3 for payroll, and 1/3 for rent and utilities. So a lot of flexibility there in the way you can spend it. The one thing I like out of the numbers that you just read was, let's say 90 loans by the banker that you talked with. If they're all doing that, gives me a chance to speculate and guess what's coming. Let's say all 4 of them have 100 loans that they have approved right now, and the average size is around 23 or 25,000. 25,000, that's about $10 million. And this is a $25 million program, which suggests that it will be probably opening up to individuals who maybe have had a PPP loan. And that is, of course, speculation. And it's, of course, speculation on the direction they're going to go beyond that. But it does kind of show, at least at this volume. And the other thing I really like about the numbers, Keith, is it really bodes well to a lot of the real small businesses that had a problem getting in. With a 4 times multiplier coming up with an average loan of 23,000. When we saw the PPP numbers, the first round was 206,000. It really shows that it's getting out to the smaller businesses that were kind of shut out of PPP.
Kelly, I just saw something pop against my screen that they're having problems hearing us. I don't know if that's just one recipient or if that's multiple folks out there.
Okay, well,
I saw someone said they could hear fine, so.
Okay, so turn up maybe your individual volume, but I think we're okay.
Okay, good.
So anything else to add on Kern Recovers before?
No, it's exciting that the county stepped up and that it sounds like a lot of folks are embracing the program early on. So, reach out, look at they have a great website on it. They answer a lot of questions. I know the lending community that's participating in, they're happy to help the community out. So great program.
Outstanding. So any other funding programs before we move on to PPP and EIDL that we might see down the horizon?
Well, there's the Main Street lending program that's being talked about, and that's a significant program for larger companies. They're still working out some of the details, but that will too be an excellent program if you qualify for that particular loan program. So I think that's sort of a tease. We'll hold that out until it's actually rolled out.
Yeah, and from what I recall hearing on it, it's going to be a larger loan program for maybe our larger small businesses. I think the minimum loan amount in it, isn't it like 250,000?
250 is the minimum. That's correct.
So 250. So it's going to be something. And Keith and I are going to have our ear to the ground looking for resources, because whereas we'll talk about the PPP program going from 8 weeks to 24 weeks, your funding staying the same. And there's going to be potentially some businesses that have needs for funding elsewhere after this money and these resources run out. So we will keep looking for new programs and other opportunities for small businesses that may need the resources. And here's our breaking news. We have some idle breaking news that came across courtesy of Aaron Falk from Congressman McCarthy's office. Thank you for sending that just in time. And it's about the idle reopening sometime next week for businesses again. So this is an exciting announcement, because it has not been known if it was going to close. As you recall, it has been open for agricultural businesses for the last maybe 3 weeks, maybe month, and agricultural businesses can get in. And according to the release from the congressman's office, that again, agricultural businesses can continue to apply, but it's going to open up to all idle qualified businesses.
Hey, Kelly, just a refresher on the idle loan for those that not applied for, don't know anything about it. That is a loan directly from the SBA. It is a 30-year amortized loan, 3.75% fixed, no payments for the first year, and it's primarily for working capital. It's a great loan. I can tell you, it seems like the SBA is working through their idle application backlog. That's the reason why they're going to open it up to non-ag businesses next week. I've received a few calls this week on clients that have gotten emails from the SBA asking, hey, are you going to effectively take your idle loan? So they're working through the backlog. It's an excellent loan. I strongly encourage folks that have not looked at the idle to look at that. As Kelly mentioned, there seem to be some caps on that now at 150. That cap may change. If there are additional funds available, the idle cap may go up higher. Also, the idle loan, you can go back in and request an additional loan. So stay tuned for any changes on that. But again, when they open that application up, make sure you're ready to hit send. So what I've said all along, I go on the SBA's disaster website every morning, and I specifically look for the idle portal. I encourage everybody to do the same thing.
Great advice. And it is good to see it open again, which brings me to my favorite part of these webinars, is speculating. And I'm speculating now. Let's see, we have about maybe slightly under 100 billion or so left in PPP. And that money has already been allocated and by Congress basically for small business purposes. Do you think it's possible that maybe these idle funds that are left in the PPP program when it expires on June 30th are being moved idle?
I think it's going to be dictated by volume. I would be very curious to see what the volume is going to be next week when they open up the portal to non-agricultural businesses. If the volume is similar to the way it was prior to April, I think April 15th is when they closed the portal to other applicants. If the volume is pretty substantial, I would think there would be a possibility they could allocate some funds in the idle area. It would not be unusual because historically, funds can be allocated in different programs. So yeah, that's a possibility. It's going to depend on, again, the volume of idle applications, I think, in the next few weeks when it's rolled out. You know, keep in mind the PPP deadline for an application is in June. So that's going to move fairly quickly, probably a couple weeks after they go through the E-Trans system to see how many applications are legitimate and then thin those out. Then you may see some monies moving over to a number of programs in the late July, early August period.
So this breaking news was a courtesy of SBA Administrator Carranza during testimony before the Senate Small Business Committee this morning. So good news to hear, and great to have the idle back. And if the money is, I mean, if I recall, it's been a while since we've talked about how much came over to idle in the CARES Act, but it seems like it was around $60 billion. And having additional resources into that program seems to be very, very interesting for so many small businesses. So great to hear. Okay, so that was the preface of our idle PPP discussion. We've mentioned that pretty much, I think, most of the stuff on this page. About 100 billion left still in the PPP. So if you know anybody that needs to apply by June 30th, because June 30th with the legislation came the last day to apply. So then we have a deadline now, and actually that works well for the 24 weeks that we'll talk about. Moving out 24 weeks is roughly, not quite, but roughly 6 months, and brings us to the end of the year. And then again, there was really something interesting regarding further guidance, and a nice press release issued by a joint press release by Secretary Carranza and Treasury Secretary Mnuchin came out to us on Monday morning, Keith, and said that in consultation, they will promptly issue guidance. And with that guidance is going to be a modified borrower application to assist those that do an application before June 30th to reflect the changes, the legislative changes that have happened. And then even more importantly, I think for most of our attendees today, is the modified loan forgiveness application that will implement the legislative amendments. So big news about changes that will be coming still after today. It's the gift that keeps on giving, the PPP program. So I think, again, the big one here is going to be the modified application. And there's a lot of hope that when the modified borrower application comes, it's going to be a little shorter than the 11 pages and a little bit easier to work with. I know, Keith, you talk to a lot of banking industry individuals, be it local bankers or be it trade shows, association and national associations that you're part of. And there's been a lot of outcry from the banking industry about the complexity of that loan forgiveness application and the loan forgiveness application form that many of their member banks are going to have to do.
Yeah, I will tell you the actual application probably going forward, not the forgiveness application, but the application for applying for the PPP loan. The program's changed. I mean, it's changed from 8 weeks to 24 weeks, and we'll talk a little bit about that. So I think some of that's going to be in the dialogue there. I do not see a lot of other significant changes to the program. I think the Flexibility Act was the big change, and where I see it's up on the screen, so we're going to go with that. There are going to be some housekeeping corrections, which there always is, where you'll have a real life example that it doesn't work, so you may get some modifications from that, but I do not anticipate any other significant changes to the program. Going from 8 weeks to 24 weeks, which is the first line, that's big. I mean, that was one of the things that everybody had requested, and that is out there. I think the reduction from 75 to 60, it's not the 50% that everybody had requested, and it's not the 34% or 33% that the county's current gift program is. But you have to keep in mind the PPP was established for payroll. So if you eliminate the payroll piece of it, then it's a different loan program. I think we're going to get into the details of the deadline to rehire employees, and then the unforgiven portion amortized over 5 years as opposed to 2 years. Now, there's devils in the details. So the folks that out there that have a PPP loan, your documentation probably says two years. I was given some information that said to get the 5 years, you have to go to the lender and ask for that 5-year period. Now, on all new PPP loans that are being made after the PPPFA was enacted, that 5 year is already in there. But loans that were prior to that still have the 2 years. So I think that's where the modification agreements are going to come in.
Yeah, and you know, the interesting part about this slide, Keith, is that this is a slide we had up 2 weeks ago before the legislation happened, when there was when we were speculating on some of the changes that might occur. And of course, the title was different then, but the 24 weeks is really nice to give that flexibility. And I don't think, at least from a lot of the clients I've talked to, that they're too impacted. I'm sure there are some by the reduction to only 60% instead of a lower number. The people that are really feeling the pain from that are the ones that are more in urban areas where they pay very high rents. And those are the ones that have kind of suffered through a lot of the PPP, where maybe you have a daycare center in Washington, D.C., and you have 4 employees, but yet you're paying a substantial amount of your monthly overhead for rent. So those are the ones, it seems like, and the move deadline did have some other provisions, and we can move into those right now. Here are the ones that we didn't talk about, Keith.
Real quick, Kelly, though, back on moving from 8 weeks to 24 weeks, you know, the kind of the underlying thing behind that is it now gives a lot of small businesses the ability to not have to try to get too creative or trying to, you know, whether it's through bonuses, whether it's through prepays, to meet that 8-week period of time. So that 24-week period it's big. I mean, I think it's very appropriate for the program. So it really, I think it kind of levels the playing field, and not having folks that especially ones that are gradually opening, not having the pressure compared to the ones that have been already open.
Yeah, and if I was speculating on our poll, if we had those 4 options and our attendees got to pick one, they would definitely, I think, pick number 1 at the top of the 24 weeks. That flexibility and being able to spend all of the funds now for sure over that period of time. So it's good, and we'll go through a demonstration if my Excel will open. It didn't want to earlier, but we'll see. Go through a demonstration on how that might look in a particular business. So Keith, here are the other Flexibility Act components that we didn't talk about so much yet. So it did provide more conditions for the FTEs, and we're going to probably save FTEs more for next week because we do expect the final rules to offer a lot more information on that. We had final rules on the 8-week. We had at least a lot clearer direction and guidance on 8 weeks, but now under 24 weeks, there are some issues that come up, and the guidance will be necessary. Loan payment, the non-forgivable amount. There's some things mentioned in there regarding the loan forgiveness that for the non-forgivable amount remitted by SBA to the lender. And then the other big one is the payroll tax deferrals, which were not permitted under, if you had a PPP under the CARES Act, are now permitted.
Just a friendly reminder on the loan payment area. You know, if you have a portion of your loan that's not forgiven, it's still a 1% loan for 5 years. You know, I challenge, you know, anybody to go out and find that type of loan, whether it's in a traditional lending community and or an online fintech lender. So it's still not a bad loan. So you can't, yeah, you know, the ideal goal is to have it forgiven, but yeah, if you have a percentage of that loan that's 1% for 5 years, that's still a very good loan.
I agree totally. And if there are going to be situations to where you're not going to have as many employees back and you're not going to get as much of a percentage. And we're going to kind of go over another aspect that has been coming up and has been reported that, you know, when the 75% rule came out, it was a sliding share. If you didn't meet the 75, you met 60%, you got 60% of it forgiven. There was a lot of speculation and a lot of geek speak on this stuff about it being now a cliff, whereas if you didn't hit the 60% threshold, you fall off the cliff. And I have an example that shows that I don't think that's going to happen, that it will continue to be the sliding scale. And I think that was the intent of the program and of Congress. But I think also this is a good slide to transition into from at least my perspective. Is these were reiterated during the new law, and just again mentioned what the cost were of funds that you could use for a PPP. And of course, they were the payroll and expense and forms, and then also the rent, mortgage, insurance, and utilities. Now, I don't know where you go if you start doing, in my example in a little bit, I'm going to show you an example where I pay a supplier and some of the things that I come out of it with. But there are some real issues that are going to still have to be determined, and that is what happens when a small business has to use the funds for something other than this use in order to survive. Maybe it is a key supplier that cuts them off and their business ends, or maybe it is something else. But in the note, Keith, it says that these are the use of funds, and hopefully final guidance will provide a little bit more clarity and a little bit more leniency in this area, even though it's hard to come out and say that they're going to come out and now say you can use it for other things as well.
Yeah, I think where this may come out is, if you recall a couple of weeks ago, there was a part of some of the final rules that the SBA has the ability to audit all loans. You know, obviously they were going to look at loans at $2 million above, but having the ability to audit all loans may bring in the question, were the proceeds actually used for the intended purpose? I guess the penalty, what is the penalty? Is that going to be an immediate call of the loan? I don't know. Or is the fact that you're obviously you're not going to get the forgiveness, that you have a 5-year term loan? That may be the fallback, short of specific fraud accumulating in the application. I think the fallback you just end up having a loan for 5 years. But I guess stay tuned, we'll find out more.
Yeah. Well, it would certainly make sense for that. And because businesses do have other challenge, and the main purpose of this is to keep your people employed, but the other purpose is to try to stay in business. And if you're not in business, your people are no longer employed. So it's kind of a catch-22 around that aspect of it. So yeah, definitely. And I will give an example of, matter of fact, I'm going to jump to that example right now. Let me just show you something this is my forgiveness form. And as you see, it's been extended out to 12 weeks, or excuse me, 24 weeks. It goes way off to the edge. And I know there's all those fancy ways of showing the screen and all that, but I'm going to use the old-fashioned way today. But I will get into kind of going through this forecast. And remember, this is one of, I think, the best tools that we have to work with, where you can estimate and lay out and to anticipate where your expenditures are going to be. But one thing I came up with on this was right here, was, you know, our company here is Kelly's Grill. It's not Kelly's Bar and Grill because what happens is, you know, you make too much money off the bar. So I wouldn't do that. But so here I had a baker that actually would produce rolls for the bakery. And I was extended when the pandemic hit. And so what happened was that, as you see, I owed him about $5,000. And so I paid him back in week one $5,000 because I was going to be cut off from a major supplier. That is not within any of these areas of payment. And I'm not advocating that you do this. I'm just saying, in talking with enough small businesses, that things like this have occurred, and it's a price of the situation. But what I am telling you is, if I pay it back during the 24 weeks, I've essentially and not claimed it as an expense, because I will be claiming these as expenses at the very end. If I use it as, and again, I'm not advocating or suggesting that you use your PPP loan to fund other expenses outside of these. I'm just saying it happens. And if you do it in this particular situation, there might be a possibility for you to pay that off before you get to the end. Only record your expenditures that you have that are more or less applicable here and are in your note, and actually get back to that. So that's one thing. One point I wanted to make is that, you know, the 24 weeks also buys you flexibility in the time. If you do use it for one of these, until we get guidance on what will happen with an unauthorized disbursement or expenditure, on what happens is you essentially do have the time in order to work that back out to the time to where you have all your expenditures in the legal side of things. So just a little bit about the grill now. As you can see, it is the forecast. I can probably delete this now, because I made an election to when to start the PPP. And I don't think that is as applicable now, because what happens is I have 24 weeks and it's less important when my PPP begins. Before, we were looking at the original date or the alternative date for the covered period. And some people were able to move ahead about 10 days, their PPP. With 24 weeks, the amount of time in order to spend the money isn't as important as it was. Probably in making that in the determination now, what is most important is to determine what is easier from a bookkeeping perspective. You could have a semi-monthly period and have to split and allocate 2 different payroll periods on the front and the back side of this. So it's really kind of comes down to selecting that original date. Is if you go with the original date or the alternative date on what is maybe an easier bookkeeping perspective. And that was kind of the change that the American Institute of CPAs put forward when they suggested that, and SBA adapted it. So now you see I've moved my time out to 168 days from the time for when my PPP started on 4/20/20. Now it runs till 10/4/20 and gives me a lot of these same factors. So what are some of the considerations that go in? What I have been doing and have been showing you is that I have used this, and if you see the gold is now actual. And then what I do is I anticipate how I'm going to spend my PPP. In my example here, I've spent it down to $100,000, which was the amount that we began with. So what I did was I did it with gross salaries, and I did it throughout a longer period of time. And I'll show you some of the questions that still might come up later. So one thing that I did on mine was I listed my employees that you saw maybe on a different sheet. And so this flows up naturally to them. One of the things that will become available to you now, we talked a little bit about the payroll tax deferral. And that payroll tax deferral for my instance is going to be 6.2% of the Social Security amount only. And it is going to be over that period of time. And for this business, it equates to about $4,400. Now, my understanding is, and I'm not an accountant, but on June 30th, when my second quarter, since these wages became due, there will be some form of election that I can make to postpone this. It's not forgiven. It is a postponement, a deferral, where I would pay half of this amount through my PPP loan, my 24 weeks in years 2021 and 2022, half in each year. So I'm given the opportunity to come back with that 4,400. You know, that 4,400 almost pays off my expenditure I had outside of the allowable expenses, ironically. So just to show you where this example is going, you saw the employees below. What it does is it comes up to the top where there's gross wages. And what I had was, after a period of time, after my 8 weeks, I had only spent 70,000. So it was going to be difficult without the 24 weeks to get all of this spent, particularly since it's a restaurant. And I had been more aggressive in bringing people back, as you see, as here were the people that I had on payroll on 2/15, with the exception of the final 2 or 3 that were new hires that I made later, when other people didn't come back to work. So one of the things that I did, excuse me, was that for myself, I capped out my wage at $15,385. Okay, we've talked about that number as being the maximum amount of payroll for any individual. So when I went forward into the next period, I blacked that out because I can't do anymore. The other thing I want to show you that I think is going to be really important to meeting the full-time equivalent or salary reduction is I have a number of other employees that I've paid for 8 weeks, or I will have paid 8 weeks at 6/15. There's 2 there for 6 employees. So what I did was I came in the first month and put this gray in and tried to pay other individuals. And what you see is that without the money moving forward in the 24 weeks, a lot of this wage is going to have to be met by the business itself out of cash flow. So the goal here is to, now I'm going to be moving forward, not paying 3,100 in wages and paying other individuals in order to try to meet that. Barring any final rules, that is how I see it laying out. And then I laid out with other employees that I brought back and paid them during the 24-week period, to where ultimately we come up here with my projection of, I ended up paying about 85,000 in payroll, which was 85%, almost 86% if you round up very slightly, which far exceeds the 60%. Okay, so that's kind of an example of how I see the form moving forward. Now, your actual form, my actual form just shows the actual that I have the same form, but I just use actual amounts moving forward to keep the two separate. So I have a forecast and I have an actual. One of the things that I mentioned earlier about kind of the falling off the cliff if you don't hit 60%. I went into the forgiveness form, and I know this is going to be changed, but I just wanted to lay it out and see how forgiveness would work. Obviously, it's going to probably work very well because I have such a large payroll amount. Many individuals won't be that fortunate, but what made that large payroll amount possible was the 24 weeks. So working through the form and putting through the other expenditures, I came to $100,000. My full-time equivalent that we kind of worked through a couple of weeks ago, and I basically brought enough people back to where I think I'll be safe under the new safe harbor rules, which I think are going to be more lenient, and also the other ones moving forward. So then it comes down to the potential forgiveness, and it's the lesser of these 3 items. And this is the one that's kind of the most interesting, I believe, because it is the one that kind of, I think, in my opinion, shows by the very nature of the form that it's not a fall off the cliff if you don't hit 60%, which has been widely circulating. And that is if I do hit only 60,000 there in wages and come on down, what happens is my forgiveness does drop to 90,000 because or actually, excuse me, right there, 100,000, I hit the forgiveness and I'll hit the 100,000 forgiveness. If my wages drop below that to 54,000, that is basically 54% of my loan, not 60%. By using this form, I can show you that it hits 90,000 for the forgiveness based on the SBA form. So I think that that's important, and just from the standpoint of being able to meet the 60%, and that's one of the things that has been popping up a lot. I don't see it happening based on the form unless the form changes dramatically. I see that as being basically two areas where you put the minimum amount in there of the three variables, and it's $100,000, of which is 100% unforgivable. So this is, and there are just my FTEs, which we really don't need to get into today because there's too much content already. And then there's the form, the worksheet form that's going to change. One last example is just the mom and pop. And I know there's a lot of questions that are coming up on this as well, is if you're going to get 60. And I'll give you my interpretation until we get the final rules. And it's fairly similar to what the exercise we just went through. If you remember our mom and pop example we had a mom and pop that basically worked in their business with no employees, a mom and pop restaurant. And so to do that, they had 70,000 in income, of which they came down with their 2.5 multiplier of their average monthly earnings to get the 14,583. Now, last week, you recall, we went through and showed a little of this, whereas the actual amount is the 10,767. So right now, guidance is really needed in this area, because right now, my interpretation is going to be, they're going to stick with that 56 days of earnings like we did with the maximum amount of 15,385. So if that happens, the maximum amount is going to be, in this example, 10,769. That is still going to be the 56, and it's still going to equate to about 73.8%. Now, the balance then is this $3,814, and that is where really the self-employed individual, the independent contractor, and others along those lines that don't have employees or possibly have employees but have a portion of their own. But that is really going to come down to, whereas if you have other expenditures in those areas, or the discussion Keith and I had earlier on, what to spend the extra amount on. You're going to make the forgiveness portion at least the 73.8. So if the other percentage, this other 26.2%, is actually spent on rent and utilities, many people work out of their homes that are the independent contractors, sole proprietors, and self-employed. And we are really looking forward to see if you can take a portion of rent in your home if you've done that on your taxes and so forth. So that's just kind of a little illustration of how everything is kind of updated for both segments and both issues. And again, this sheet will be available. It has been my working sheet. I think it's accurate. I would double check the numbers at all times. As it gets added to, things can happen in a spreadsheet. So that's a little bit, and we're going to be taking your questions shortly. So start filling up the question box. I'm going to stop sharing this and go back to the PowerPoint. And actually then we'll finish up there and get into the questions with Keith. So good faith effort. It did become a little bit easier this time, because this last one was really kind of interesting on trying to get to that full-time equivalence, the inability to return to the same level of business activity of 215 related to sanitation, distancing, and other activities caused. And that's gonna generate more guidance also. And the reduction in hours, which will be more guidance. I'm going to throw in the cash flow because it's still vitally important. And we'll be back next week. And until then, let's get into your questions right now and see what we can do. And I have to stop the sharing of the slide in order to get into the questions. I do not know why, but let me go to some of the questions that I received by email first. And we always like a question that is a little bit concise and short. If it's very long, it's very difficult to me to get to on the screen in live time, real time. But here's one that is coming after the sole proprietor with employees issue. And the calculator shows a couple of different things. And the question is, if I keep 2 employees and sole proprietor, do I qualify and meet the employee count for forgiveness? And there have been different times when this individual had employees. From what I'm reading right here is that yes, you would meet the requirement because it goes back to 2/15. And on March 15th, or excuse me, February 15th, it looks like you had 1 employee. So I think you will be fine. But then again, the final guidance on full-time equivalents and the reduction is still going to be necessary, even though I think Congress really did us all a favor with kind of adding that last safe harbor exemption down there. Keith, couple questions. Keith, do you think the current recovery loan program will be conformed to the recent PPP amendments allowing for more than 16 weeks to utilize the funds?
You know, that's a great question. The fact that it is a county program that was developed fairly quickly in an effort to get the 25 million out. I would think if it's a reasonable adjustment, then you know, that could be a suggestion. And the fact of the matter, it is, again, it's a county program, so I'm not advocating that you flood the county with letters, but it is something that you could probably reach out and request consideration. Whether it happens or not, I don't know. So to answer your question, I got to believe they may be flexible, but we'll see what happens, because the new rules for the PPP just were released, and the county wanted to roll out the current recovery program fairly quickly.
Our neighbor Carol asked a question regarding extending the 24 weeks. And do you think that there will be an 8-week consecutive period within the 24-week period? In that case, you can pick an 8-week period for the 24-week period or disregard the covered period. It's an interesting question. 8 weeks within the 24-week period, do you think that could be in the final regulations from SBA saying, okay, we've allowed you 24 weeks, but you still need to select 8 of those weeks?
Boy, that's a good question. I don't know. I don't know the answer to that. I would think there'd be a certain amount of flexibility, however. But I couldn't, I don't want to make a hard and fast rule for the SBA, but I don't know.
Yeah, I agree with you on that. That'll definitely come out in the final SBA rules, and it could. I'm kind of leaning against that it's going to happen. What I think I'm hoping, and I think I mentioned, was that anywhere in that 24 weeks, you can select a week to where you brought back the people. Right. Hopefully it won't be on 12/31, and there's a period of time to where you can utilize most of the funds to get people back, and it went for that particular payroll purpose. But 8 weeks seems a little getting back to being restrictive. On my example that I showed earlier, the bulk of my payroll was early on, but I didn't receive the full-time equivalent until I brought everybody else back, which were months after that, or weeks after that. So that would be our guess for now. Hopefully we'll know more soon. Keith, is there anybody who can help fill out a PPP forgiveness application in Bakersfield?
I would reach out to, and Kelly's asking me this question, but I would reach out to the Small Business Development Center. Go online, Kelly. You can help them with how they would get set up, because there are consultants that could assist. They're not going to fill it out for you, but they're going to assist and hopefully answer some questions.
Yes, and I think any of the SBDCs throughout the Central California regions have people that can do that. We definitely have somebody in Bakersfield that can do that. The only thing I would ask is that go to our website, csubsbdc.com, and request services, or start here, or whatever the box is, we start the application process. And then I would ask that you wait until we get the final forgiveness application, because we do know another one is coming.
The challenge, though, keep in mind, this program ends June 30th. So if you're starting your application on June 28th, you may not get in. So earlier is better.
Okay. Is the 12-month waiver on idle interest free?
No, it's not going to be interest free, but you're not going to be making payments. So is it accruing interest during the time? Yeah. And I got to be honest with you, it's such a great program. I would not worry about the accruing of the interest at 3.75.
Keith, I think you've been on record on previous webinars as saying that that is really the blue chip out there for people to go after.
Yeah, again, it doesn't have the forgiveness, but you got 30-year financing for working capital. Typically, working capital is operated under a line of credit, so you can do a number of things within approved disbursements for 30 years at 3.75 without a prepayment penalty. So you can't get. Let me put it this way: you can't get that kind of loan, on a conventional basis at any bank. So, and you definitely can't get it for 30 years. So it's, again, that's why the program was successful and the portal was shut out, because it is a great loan.
Keith, can 100% of PPP funds be used for payroll?
Yes.
And I think we mentioned this with our breaking news. Do you think they will reopen the 10,000 funding for small businesses at some point?
I think it goes hand in hand. So typically when you applied for the grant, you also applied for the EIDL loan. So I would think, now keep in mind, it's that 10,000 is based on 1,000 per employee. So that still has to be met, but yeah, it would make sense that they would.
Yeah, and we haven't really had a good grasp on if you get an EIDL, if you get an EIDL advance, if you're going to get your EIDL, but this is clearly about the EIDL advance, and they will be taking applications as of next week. The SBA will. Here's a question on seasonal employees, and I'm going to defer that until next week. I'm going to look at this question because I think we need to look at seasonal employees, and it's a little complicated because in our 3-county region, we have seasonal employees in the summertime and in the wintertime. And I think by the timing of everything, it makes it very difficult. But we will get to your question either directly or indirectly next week or before. I applied for EIDL advance and the loan on April 2nd, and I got denied about May 30th, and it was dated April 25th. She's wondering if she'll still get the advance.
I will tell you, if you were denied, you have the ability to call and email, and there is not one customer that I've talked to a lot of customers that have not had the ability to get to the SBA both via phone and email. So that's one where you could follow up with a call and see, personally what happened and what the process is.
And the EIDL is a as needed program, whereas you have to demonstrate need for the working capital for EIDL. Sometimes we're seeing clients get denied because potentially they have too many current assets, too much cash or other things on a balance sheet. But it's always good to try to figure out, because it is difficult to try to figure out. Sometimes it's possible that they could even be declined in error, or an error that the borrower made on the application process.
The EIDL is also, they do run credit. So if there are some significant credit issues, that may be the reason for the decline. But it's something that you can reach out to the SBA and find out.
Okay, as a sole owner, is the portion I can take a salary now 60%? I think it's only 60% as far as meeting the forgiveness. I think it still goes back to basically what you put in your application to begin with, which brings it out to 73.8%. At least that's my opinion until final rules come out. Can you please clarify insurance premiums? And I think that's a great question because I can't. I have to hide behind further guidance because you have workers' compensation that is basically a payroll expense. You have group term health that can be an insurance premium. You have sometimes employer paid disability insurance that's an insurance premium. So without a little bit more, just a little bit more guidance, I can't tell. Okay, here we go, Keith. It sounds like if you've already started the PPP and you still have funds in your account, there is no longer a cutoff after 8 weeks. I think we'll both agree that's correct.
That's correct.
And you may continue to use funds appropriately as long as funds are available up to 24 weeks.
That's correct.
That's the beauty of it, isn't it?
Mm-hmm.
That is the beauty. Well, I'm glad we were able to clarify that. I'm sure many people had that question. So next question would be, this is different. What happens if you received a PPP loan, but I've received less because I put the wrong monthly payroll cost? That's going to be a tough one to fix, I would think, right, Keith?
Yeah, I don't know if you can go back to your lender with a or if the lender would be even willing to do it with a amended application and amended loan. I don't know. That's the first time I'm sure it's happened before, but because the lender typically would have verified your documents. So unless you were with a lender that was really lax in verifying your documents, and they typically would have tested it, not sure how you missed it significantly. So I mean that would be a question you could ask your lender.
So we're getting a lot of questions regarding the insurance premiums portions, and from what I took from the legislation was the insurance premiums were associated with payroll costs.
Right.
So I don't believe it's going to be for anything else, any type of liability, property, auto, etc. Commercial liability. It could be for workers' comp though, because that's one that's associated. But again, we are going to need that particular guidance.
Sounds like we have a lot of insurance agents on this webinar, by the way, Kelly.
Well, we did have a slide today that said insurance premiums on it. That is something that was on the legislation, and that's how it was phrased. So we threw it out there. One thing that did fall off that was pension and profit sharing costs, but I believe those are still allowable.
Right.
I think the flexibility probably was to identify other areas, but I think if you're paying into a retirement plan, that is a bona fide acceptable cost.
The question is on the timing. Are you paying an employer match from 2019 and 2020? I don't know. That's a gray area there.
Do you have to do 24 weeks or can I finish my PPP in 10 weeks?
Absolutely.
Keith, I think I heard from one of our consultants out in the field that had somebody who completed their PPP in 3 weeks. And it's a little mind-boggling. Something I definitely want to get clarification and find out what happened if it was just a lower amount but anyway, it can be done over 10 weeks.
Yeah, I just, the challenge, let's say you did it in 3 weeks, is, was there significant bonuses paid? To me, that opens up some questions because that's different than what was submitted in the application and the calculation there. So it may be a seasonal, I don't know, but that's unusual.
And if it was based on 2019 payroll, they could have grown substantially and been an essential business that thrived during the period.
That's correct.
So but it does pique my curiosity for sure. My PPP loan says I need to spend within 8 weeks in order to, the expenditures in 8 weeks in order to get considered for forgiveness. Now the Flexibility Acts, I get 24 weeks. Will those expenditures in weeks 9 through 24 be considered for forgiveness?
Yes.
Will we meet the full payroll costs needed for forgiveness in 10 weeks? Do I file for forgiveness then, or do I wait for the 24-week period to end?
I would file shortly after the 10 weeks. I wouldn't wait till the end of the year. The question is, a lot of companies were teeing it up to file. I think next week was the first 8-week period. Was it, Kelly? Not sure.
Fortunately, I forgot about that now.
Yeah, so you do have some folks that were ready to file early. So yeah, I mean, I would. Now the challenge is the lender ready for the new forgiveness application? I mean, that's, you know, I don't know if they are or not.
If you received a PPP loan on May 4th and started your expenditures on May 16th, which would be the next period, when you pay, where you pay your wages twice a month makes it a lot easier on our bookkeeper. Okay, let me rephrase that. And I think, again, this is a question that goes to the flexibility of the cover period and the others. So by starting on May 4th, you started on May 16th, which makes it a lot easier because that's the beginning of your pay period, which makes it easier and not to have to prorate. And I've seen some people that have had examples already of where they have to prorate their beginning and their back half. And there's almost needing to be rules on that. Do you have to go in and count each hourly employee for each hours? I guess to be correct, that's what you would do. But it could also be if you have, you know, a 3-day period to where you're not covered and you have 12 days in that period. So is it 12/15ths of each individual employee? It does create an accounting nightmare. So that is kind of one of the nice things that you can actually do. The spreadsheet will be coming along with a couple of the links in the next day or two. It'll come in an email to all those that attend today. If you don't want it, just delete it. Oh, can I pay off my business line of credit with an EIDL loan?
With a EIDL loan?
Yes.
Yes. You cannot pay off a term, if it's term debt, a mortgage, but you can pay off a line of credit.
If you received an EIDL advance, but not the loan, the advance is forgiven, right?
It's a grant, that's correct.
As long as you didn't get a PPP.
That's correct. Or
if you've got a PPP, it does not appear that it changed. It changed. It's still treating the PPP and the EIDL.
Yeah, they would deduct the EIDL advance from the PPP allocated amount.
The Kern County Recovers Loan, is there a web link to apply? You can go to their website, the Kern County, type in Kern Recovers or Kern. It's a county website and they have all the contacts there. We will include the link in the email that goes out this week as well. But if you're wanting to jump on that this afternoon, I understand why. Just Google Kern County Recovers, Kern Recovers, excuse me. Did you say that the max is $15,384 per employee that can be forgiven over 24 weeks? That is if that individual earns $100,000.
Right.
Because the $100,000 is less. If they earn less than that, where you have to kind of balance and really manage this, is that you still have the requirements for bringing back more employees to your full-time equivalent position as of February 15th. So once you start paying, if you had, say, an employee that made half that amount and you paid him $15,000, it would be difficult for you to reach that full-time equivalent level. Okay. 110, we're running late. I'm trying to go through trying to cover the ones that we haven't hit yet. Our loan was reduced by 25,000. So do I need to adjust the listed payroll amount on the application to correctly compute the forgiveness application? Keith, I'm confused on why.
Well, it sounds like when they did their application at their lender looked at the documentation and thought the eligible amount should be 25% less. So the question is, should they adjust? I bounce it back. Why was it reduced by 25%? And whatever was reduced by your lender, that's what I would reduce accordingly.
And we also know there are lenders that used a factor of 2 times.
That's correct.
So that could have been it, but yeah, it's really a little more information. Would or how difficult would the lender amend the current document to the new guidelines? For example,
I think it's going to be fairly easy. It's probably going to be a modification agreement, one page, and effectively you're asking to go from a 2-year payout to a 5-year payout. You still have the 2-year, but I think that's how it's going to be. I do not see a significant burden on the new documentation, but there will be required.
Mm-hmm. Okay, well, great. Well, that's going to wrap us up for this week. Thanks again to the expert commentary and question answering of Keith Brice. Keith, always a pleasure to have you on. Look forward to having you back in the next few weeks and continuing to be part of the program and get the word out and keep everybody moving in the right direction. So for Keith, I am Kelly Bearden. Have a great day. We'll be back next week with the number 14. Good luck and bye-bye now.